Roku just announced their Q2 2022 results and the stock fell by about 25%. It's currently trading at about $63 with a market cap of about $8.5 billion. In the Q2 earnings, they have missed both the revenue as well as earnings per share estimates. If you recall, in the last quarter when I did the video, they said they would do about $800 million of revenue, which represents close to 25% year-on-year growth. Instead of that 800 million, they only made about 760 million, which represents 18% growth year on year. With respect to the earnings per share estimates, the street was expecting 68-cent loss, but Roku reported 82-cent loss. So this is the reason why the stock fell about 25%. Right now it's at $63. I want to see if I can buy the stock at this price by looking into its evaluation 5 years out. Before I do the 2026 evaluation, I want to remind you that I did 2 videos in the past. The first video back in January of this year, I said it is a buy at $167. Obviously, that's a big mistake. And when I look back into that video, it looks like I have not done the evaluation. It came back from $400 to $165, and I've assumed that, okay, this company has more, so it's going to go back, right? So that was an obvious mistake. But in April of 2022, when they reported their Q1 earnings, I came back to my senses and I did the evaluation. And I predicted $147 and it was at $86 then. So that was about 70% gain in 4 years. And even though there's an execution risk, I said 70% will definitely beat the S&P 500, right? So I said it is a buy. Let's look at their revised evaluation in 2027. They made about $2.7 billion of revenue in 2021. Previously, I assumed 25% revenue growth, but now I'm only going to assume 20% revenue growth on an average in the next 4 to 5 years. Because once this economic downturn is done, I'm confident that they can bounce back. And remember that they're also adding a advertising tier, right? So that's going to boost their revenue as well. So with 20% growth in the next 5 years, in 2026, they will make about $6.8 billion of revenue. I'm going to assume a 15% net profit margin. That's going to get them $1 billion of net income. So since this is a company that's growing in the 20% range and having a net profit margin of 15%, a 15 multiple is low and 20 is high. So I'm going to assume a 17.5 multiple, and this company would be worth about $18 billion in 2026. So when we convert that into a share price, it's going to be about $133. But currently the stock is about $63, right? So $133 in 2026 represents a 2x in 5 years. At the moment, I will not necessarily buy, but I'm going to watch this company in the next few quarters